Hey guys, how you doing? I'm Kenty, and today I want to talk about a couple sort of problem things that I've seen in the last few days, which may be cause for concern for investors. And so today I'm just going to kind of talk about what to look out for. It's not like we know what the perfect place to invest is, but I do know when something is risky and maybe you don't want to just follow a salesperson's advice and get into something that is promising really good returns and really stable returns, and then that can factor into you actually losing all of your investment. Those are the investments that I want people to avoid at all times, but good salespeople with a good pitch can make it sound sort of too good to be true, and then that ends up backfiring on a number of investors. And so where this video is coming from is last week, a company in Edmonton named CWS Capital, the founder has been missing. Nobody can find him for the last couple of weeks. All of the people that invested in this company don't know what's happening, and the business just shut its doors. And who knows if the investors in that company are going to get any of their money back. I don't know a whole ton about, how much assets they had, but I do know, sort of anecdotal from news reports and things, that there were a number of people that invested basically their life savings into this company's sort of charge. And what they were investing in, from my understanding, was foreign exchange trading, which is an extremely risky way to trade your money. And I see people like this all the time on Facebook that are like, you want to make money, you want to get into day trading, Forex is the way, not understanding that, this is going to be a really, really risky way to invest your money, because giant banks, giant corporations, giant governments are the ones that are manipulating this sort of system and moving money back and forth. And if you make one wrong move, if you're the person in charge of how to trade that, you can lose it all. And then all these people that you promised their money to are going to lose them. So foreign exchange investing, in my opinion, is extremely risky and something that I would avoid at all costs, unless you want to take a little bit of a gamble with, say, a small percentage of your large portfolio, something that is not going to ruin your retirement. And so what happens is people become impatient when they're investing, but the best way to invest is in good assets and remaining patient and letting the system do its thing. So there are investments that are safe, and then there are investments that I don't like when I see them, including foreign exchange investments. Something I've seen, obviously, not as much anymore. A number of friends and people I know, or stories I've heard through friends, of people getting into these wild crypto investments. That isn't happening as much anymore. We sort of saw that, rise. There's 20,000 different crypto sort of investments out there. Are they all going to last? Of course not. Had some friends invest in one where their promises of returns were, 50 times their original investment. When I say, well, you might get lucky, and then everybody will want to follow, but the people already got lucky, you're already too late to that game. It always sort of works the same way. Day trading is something you want to avoid. It's very easy to be a successful day trader in a bull market. It is basically next to impossible to be a successful day trader in a bad market. That's why they're not talking about it so much anymore. And then other investments that I would try and avoid as an everyday investor is private equity, exempt market securities. Let's just a story of mine. Before COVID happened, I was talking to a friend of mine. He was in what appeared to be a successful sort of exempt market private equity firm selling investments to very wealthy individuals and families to get into these companies. And everything looked great. And I was going to potentially recommend to some of my wealthier clients, maybe you want to take 10 or 15% of your portfolio and invest it with a company like this or another one. And I was still working through the due diligence of it all, trying to learn as much as I could about the company. And when COVID hit, that company actually just straight up went underwater immediately, and all of those investors lost their money. So thankfully, I was still working through the due diligence. A bad thing happened, and when bad things happen to companies that are taking too much risk, then the investors are the ones that are going to lose their money. So it's always the same story. That's why I say you want to invest in things that you understand. And there are only a few things that people really can understand. So you've got like companies. You're investing in stocks of a company. You bought some shares in Apple. If Apple makes money and their share price goes up, you make money. If you invest in a bank and their share price goes up, you make money. If they pay a dividend, you make money off of that dividend. That's not to say that banks and big companies can't lose money and that stock can't decline. Some big companies do completely go out of business. That is why you need to be diverse in your investments. So when you're buying an ETF of, say, the TSX or the S&P 500 or something like that, what would have to happen in order for you to lose your entire investment is that every single company within that mutual fund or that ETF has to go out of business at the exact same time. If that happens, I wouldn't be too worried about your retirement account. And that's kind of what I tell people is like, if every company goes out of business on the same day and your investment goes to zero, we're screwed. I'm not worried about your cash anymore. I'm worried about everything else and the zombie apocalypse, and Godzilla's probably coming out of the ocean or whatever. So there's stocks. Bonds are another thing. Bonds are debt that corporations and countries and provinces and cities take on. They offer debt to their investors, and then they pay you an interest rate, and then they give you your money back at the end of the term of the bond. There's some fixed income sort of security within a portfolio. Not saying that bonds don't have risk to them either, but that means that every government and every corporation that has this debt, if you're going to lose money on a portfolio of bonds, like over the long term, or lose your entire investment, is because every single government and corporation could no longer afford to pay their debt. As soon as that happens, we are screwed. Real estate is another investment that people understand. Generally speaking, you have to take on debt, and then you're hopefully going to have some form of income stream and hoping that the real estate is going to increase in value over time. It's not as diverse as an ETF or a mutual fund because generally you're probably buying one unit or a couple of units, and there's a few more trigger factors that could say, okay, things could happen in this city where there's no jobs anymore. All of a sudden, that investment is going to lose money in the short term. But if you can hold these investments, land, real estate, whatever, as you've seen over time, in most cases, that's going to go up in value because it's a long-term investment, just like the bonds, just like the securities and the stocks. Yes, you're going to see fluctuations, but are those going to go to zero? No, they won't unless, the worst thing happens, right? And then we're not really worried about money anymore. There's cash, there's GICs from reputable institutions where you can say, okay, They're just going to pay me a set interest rate. My money's safe. And so a lot of people lately have been like, well, why should I trust Modern Advisor with my money? Well, Modern Advisor is basically a company that's acting as a stockbroker. So that's the best way I like to explain it. But there's a number of people on the team, and they have a big portfolio. But what they're buying is ETFs in giant corporations like Vanguard, iShares, BMO. These ETFs, if they fail, if Vanguard fails, we're screwed. Modern Advisor has the ability to actually go out of business, and you wouldn't lose your investment because your investment is in these ETFs, and another financial corporation would actually buy the assets, and then they'd still be invested in the same place. So I don't think that's going to happen. They are backed by CI at their back end, which is a huge company, and Desjardins basically bought the company that had originally invested into Modern Advisor. So the likelihood of a company like that actually failing is sort of your worst case scenario. So what you really need to look out for is the promise of great returns. Anytime you see the word guarantee on anything, unless it is a guaranteed income fund or a GIC, that's the only time you're allowed to hear the word guarantee when you look at an investment. Otherwise, there's no guarantee with any investment at any point in time. So if you ever hear that from a salesperson, walk away immediately because they're lying to you. And another type of investment I wanted to mention that I see a lot that's quite dangerous are these real estate bond type funds. They're kind of hard to understand, but what they'll say is they'll say, I want you to invest in this company. We've got this project. We need money for it. We're going to give you 8% rate of return for the next 5 years on this investment. And you're like, great, I can't wait to get 8% guaranteed. There's a few things happening here. That 8% is not compounded, so it's not actually 8% the same way it would be on a stock that's going up 8%. And the other big thing is that these are not liquid. So I've seen retirees invest their RSPs, all of their RSPs into these, and then be like, I can't even get any of my money out, even though I need it in retirement, because I wanted this guaranteed 8% rate of return. And if this project does not make money, then the sales team needs to go out and get more investors at a different guaranteed rate of return in order for you to even potentially start getting your money out of this thing. And if it fails, then you will lose your investment because there will be no cash, because you've invested in too small of a thing. So yes, if you're investing in something small, it can have these great, amazing returns, but generally speaking, people don't need great, amazing returns. They need steady, okay returns for the remainder of their lives, which is doable. So that's the thing, is just investing in things that you understand, where the money's safe. It's basically virtually impossible to lose your entire investment. And then you just have to be patient, which is very difficult, especially during times like these when nobody knows and money can be tight and inflation and all these other things. It is scary, but we get through these things. We do as people, and we'll figure it out. And investments that have made money before because they make sense will continue to do so. Hope that makes sense. Maybe it didn't. I was just kind of rambling on. Anyway, go Oilers. I will not be filming a video for a long time with a shaven face or not wearing some sort of Oilers paraphernalia. Let's get in the cup, baby.